What is going on, traders? Hope everyone enjoyed their holiday, but it is time to lock back in because we got some things we need to talk about when it comes to the overall stock market. Before we start, like, subscribe, comment your thoughts below. Let's get into the video. So first thing first, we gotta talk about the VIX because everyone's been asking me when am I going to go over the VIX ever since I left that YouTube comment saying the VIX has fair value gaps to the upside. And so we're finally here and we're going to talk about it. So right now we're looking at the 4 hour time frame, and as you guys can see, we have not one, not two, but three fair value gaps to the upside. Now, if you don't know what a fair value gap is, I encourage you to go 2 videos back and watch that video where I go into great detail on what these are. Now, what's important to note here is where we are on the VIX, where we currently are on the VIX. And right now, we're right above a gap fill at around 14, between 14, 13.8. So it's important to note this because what do I tell you guys on this channel all the time? Gaps have very strong support and resistance. Now, I'm not guaranteeing that the VIX is going to bounce from here or anything like that. I just want to warn you guys and let you know to be cautious around this area because we very much can see some type of bounce here from the VIX. Now, if we don't see a bounce and we do continue to head further down on the VIX, then I'm looking at a move possibly as low as about the 13 strike, where there is another gap that needs to be filled at around this area. Now, if we're talking about a Santa rally or some type of melt up, then I do imagine the VIX is going to want to head as low as about 11.69, right? And why is this level so significant? Well, if we zoom out, we see multiple times that the VIX has bounced off this level. I mean, you bounced here, you bounced here, you bounced here, you bounced here multiple times. And not only that, but you see a massive bullish wick right here as well. So the VIX has very much respected this level. So again, if we're talking about a Santa rally or anything like that, I do imagine that's where the VIX is going to want to go. Now, when we're talking about the market being inverse of the VIX, and if we're talking about like a massive drop or some type of correction or anything like that on the VIX, then we could be looking at a move. Let's actually get rid of this so there's no confusion. So we could be looking at a move back towards this fair value gap all the way towards the 24 strike. Again, we're very illiquid in this area, and we talked about this before, right? So we're very illiquid. We have no structure in this area. We create some type of structure here, and then we break down even further, creating two more fair value gaps. So at some point in time, we're going to want to liquidate this area. Traders call it a liquidity grab, right? So that's what I'm looking at for the VIX. So we don't want to marry the idea that the market is just going to keep pumping and pumping and pumping now, because now we have some type of confirmation that at some point in time the market is going to want to drop because the VIX obviously does the inverse of the market, right? So at some point in time we're going to want to liquidate this area, or the market is going to want to liquidate this area, and we see a move as high as about the 24 strike range. So that's what we're looking at in regards to the VIX. And so now we got to talk about the SPY. And so we go to the SPY here, right? And so I kind of want to take the fair value gaps off now because now it's just looking clunky, but we'll rock with it. Okay, so right now we're looking at the SPY daily time frame, and as you guys can see, we're in a critical area right now, right? We're in this rising channel, right? We rejected here, bounced here, bounced here. So you guys know I don't make this stuff up. And so we zoom in, and what do we talk about for like the past 2, 3 videos, right? We talked about being careful between 600 and 604. This is not a time where I will be looking to get calls on the SPY until we get some type of confirmation. If anything, you will be looking to get puts, or you'll be looking to sit on cash. At least that's what I plan on doing. You do what you want, all right? Not financial advice. You do what you want. But what's important to note here, and we talked about this, is just how strong bears are in this area. I mean, if you look at all these candles here, let's actually get rid of this real quick. But if you look at all these candles, you see that there are a lot of bearish candles in this area, and bulls are pretty much non-existent here. So there's a very strong chance, and it's not like 100% or anything like that. There's a very strong chance that we see some type of rejection around this area. Now, if we're talking about new highs, then we want to see a break above 608.5, 608.6, and then we can start talking about a move towards 610 and 614, so on and so forth. So right now we're at a very critical spot, and ironic enough, we have data coming in tomorrow. So that's going to be important to look out for. Now, when we're talking about downside in regards to the SPY, if we start rejecting from this area, your main level, once again, is 598. You break below 598, that's when things can get pretty ugly on the SPY, and we can start heading back towards that target that we talked about in the past, 576. We have yet to fill this gap. We have yet to clear out this area. We have yet to mitigate these fair value gaps around 576, between 576 and 570. So that's what I'm looking at for the SPY. Now, the lowest we could potentially go is about 560, okay, around 560, between 560 555. So that's the lowest we could potentially go when we're talking about the SPY. Now, I'm not counting on that just yet. I don't have that as a target just yet, but it is something on the table that we need to pay attention to. And we talked about this in the past where whales are loading up puts around the 562 range. And so we look at the options chain on unusual whales. And as you guys can see, right here, so this right here has really got my attention. These puts right here. So we have 565 puts for March 21st, 2025, with 11.2 million premium. And look at the ask. The ask is at 20,555 versus a 87 bid, right? So whales are very much buying this. Why? Because we know that if the ask is higher than the bid, then that means whales are buying. If the bid is higher than the ask, that means whales are selling. So very, very interesting. And so we click on this and give it a minute to load here. But when we click on this, what we're looking for is an ask higher than the bid, and then we're looking for higher bullish value than put value. Well, higher, higher. Sorry, these are puts. I'm saying it all wrong. So we're looking for a higher ask than bid, and we're looking for higher put value than call value. And so far, it's quite the opposite. So these might not be playing out just yet. So it is something to look out for, though. All right. So we don't want to jump the gun on those puts just yet. But once put if the put volume, so we pay attention to this contract, and if the put volume and the ask start to pick up even more, then that's something we want to pay attention to. But what's important to note as well is just how many put plays are coming in to the options chain, right? We're seeing 535 puts for 2.9 million. I don't think we're going to hit that low by March. That would be absolutely insane. Let's actually check. Yeah, so that's just a higher bid than ask, so we're not too worried about that. And then you have 575 puts for February. You have 600 puts for March. And so when you look at those, you see that the premiums are pretty high. For the 600 push, you have a 7.26 million premium, and then what was that? The 575 push, you have a 2.44 million premium with a higher ask than bid on both of these plays. So that means that whales are very much buying these plays. So a lot of puts are coming in, and so when we click on the volume over open interest, we see that a few puts are coming in. Nothing too crazy. We have 565 puts, 555 puts. These 555 puts are for June 20th, so that's interesting, right? And so we talked about, we pretty much, I literally just said that if we're talking about a lower target in 576 or 570s, that we can head as low as between 555 and 562. And so, ironic enough, 555 puts are in for June. So, something to pay attention to, something to look out for if you use an options chain for trading. And also, these 565 puts for March once again. So, definitely something to pay attention to if we're talking about downside in regards to the SPY. So once again, be careful between 600 and 604. Until we break above 604, I will play the safe route and say 605, which is your psych level. I wouldn't be talking about new highs just yet. Once we get above 605, then we can start talking about the previous highs at around 608, and then after that, we're looking at new highs from that point on. So that's what I'm looking at in regards to the SPY. And so we look at the ES. And so ES, essentially the same thing, right? You're at a critical area right now. You're pretty much at a supply and demand zone. We're having you guys, as you guys can see, we're having a hard time getting above 6,100. So once we get above 6,100, then you're looking at about 6,115. You get above 6,115, then you're looking at a move all the way towards 6,150. You get above 6,150, obviously at that point you're looking at new highs, and you can start heading as high as about 6,300, which will pretty much be your Santa rally, right? So that's what I'm looking at in regards to the ES. I mean, it's pretty much talking about the same thing when we're talking about the ES. You're just looking at the SPY. So when we're talking about downside here, there are fair value gaps that need to be mitigated all the way towards 5,800, right? The lowest I'm looking at is about 5,700, which is a gap right here. Hopefully you guys can see it. I know it's a bit clunky, but just bear with me here. But yeah, you're looking at a gap all the way towards about 5,630. And I imagine that's like the 560s target on the SPY. So that's a move that we can be looking at as well on the ES in the long term future. So something to think about, something to pay attention to when we're talking about the ES. And so we look at the triple Qs. And so again, I told you guys to be careful between 530 and 533 on the triple Qs. And as you guys can see, like I said in our one of our previous videos, that we are mitigating this fair value gap. As you guys can see, we're liquidating this area, no structure or anything like that. So we're clearing out this area right here, and pretty much we're pretty close. All right, we're pretty close to that 533 target. So definitely be careful around this area. If the triple Qs breaks back below, I would say 526, then you more than likely are looking to clear out this area. And if you start rolling back into this channel here, right below this trend line here, then you're definitely looking at a move much lower on the triple Qs. So I still stand by what I say. I still think we're going to see 492 in the future on the triple Qs. I would say the near future, or sometime between January, February, I imagine. But we'll see what happens. All right. We don't want to jump the gun. We don't want to get too optimistic just yet. So that's what I'm looking at for the overall stock market right now. If we look at Bitcoin, Bitcoin's having a hard time just staying above, what is it, 99,100. As you guys can see, there are fair value gaps to the upside that needs to be mitigated as high as about, I believe, 105K. But as you guys can see, we cleared one of these fair value. We didn't clear this. We actually just made this. But as you guys can see, we just made a fair value gap. So I do think Bitcoin is going to head higher. I would just like to see it get above 99,000. I would say 100,000, honestly. You want to get above 100,000. I mean, that's your major psych level. That's really the only level that matters at this point. If you get above that, then you're looking at a move to 102K. And then after that, you're looking at a move to 105K. All right. And so we look at SMH. I'm going to look at the semiconductor ETFs. And so when we're looking at SMH, right? SMH is looking pretty strong, and this is a good sign for NVIDIA, right? As you guys can see, we are breaking above the symmetrical triangle, and so again, we don't want to jump the gun here because reason why we don't want to jump the gun is because we've done this plenty of times before. We've broken above the symmetrical triangle like multiple times. You broke above it here, you broke above it here, false breakout here. I mean, you just continuously have false breakouts here. So it is something to pay attention to when you're talking about SMH, but something else that's really crazy is that there's a gap all the way towards 270 and a fair value gap at the 270 range. So if this is an actual breakout here, we can head as high as 270 on SMH. But again, we don't want to jump the gun because we've seen this happen before. We've seen plenty of false breakouts here. So you definitely want to be careful when you're talking about the semiconductor ETF. Other than that, that's really all I have for this video, guys. Hopefully, you guys got something out of it. If you agree, let me know in the comments below. If you disagree, let me know in the comments below. Just keep it respectful as always. Discord link is in the description below if you want to see how we're going to trade these things this week or these last 2 days of the week. And hopefully you guys really enjoyed your holiday. Until the next video, traders, have a good one.